Hello and welcome to Explain the Charts, your one-stop shop for in-depth market analysis. Today we're tackling the SPY, the S&P 500 ETF. First, let's look at the current news and events impacting the SPY. Recent headlines suggest optimism around the new Treasury Secretary appointment. The news indicates a strong week for the overall stock market, with the Dow and Nasdaq also performing well. This positive sentiment is expected to have a bullish impact on the SPY. However, there might be some uncertainty, so we need to check the charts to confirm this bullish outlook. Now, let's move to the one-day chart of SPY to see how the price action reflects the news. We observe a clear upward trend over the past few weeks, showing consistent buyers in the market. Notice the recent consolidation period, which indicates a pause before potential further gains. The price has been consolidating around the 450 to 460 range and is now testing resistance at 460. A successful break above 460 would confirm the bullish trend, opening the way for new highs. Conversely, a drop below 450 could signal a short-term bearish reversal and trigger potential profit-taking. To gain a clearer perspective, let's zoom in on the most recent two-day period on the one-day chart. This period showcases the current consolidation and the level at which the price is facing resistance. If we see a decisive break above 460 with increased volume, it would suggest a potential breakout. However, if the price fails to break above 460 and starts falling, it might signal a short-term bearish reversal. We must observe the volume on both breaks above and below 460 to confirm their validity. Let's switch to the one-hour chart to understand the price movement within a shorter time frame. Here, we look at the price action over the last day. The one-hour chart shows short-term volatility, which is usual for this time frame. However, the overall direction seems to be trending upwards. This upward trend supports the bullish outlook we observed on the one-day chart. Let's take a look at the 15-minute chart for even more granular analysis, focusing on recent activity. Here we can observe the short-term fluctuations better. The increased volume suggests an increased interest in the market during the period. We see that the price has been going up and down. This level of volatility is expected. It's important to note that this level of volatility is very usual and nothing to necessarily concern yourself about. However, we must also check the support and resistance levels on the other time frames. In summary, based on both the current market news and our chart analysis, we see a mixture of bullish and bearish signals. The overall trend on the daily chart is bullish, suggesting that the positive news is influencing the market. However, the price has recently faced resistance at 460 on the one-day time frame and has been consolidating. A breakout above 460 on the one-day chart would reinforce a bullish outlook, while a drop below 450 would likely signal a short-term bearish correction. The one-hour chart shows short-term volatility with an upward bias, also supporting the potential for further price increases. The 15-minute chart shows the short-term level of volatility, which we expect in this time frame. Thus, we should look at the one-day chart before concluding anything based on this time frame. A confirmation of any of these levels is highly important for short and long-term trading strategies. It's important to manage risk and use appropriate stop-loss orders regardless of the predicted direction. Always stay updated on market news, and don't forget to consider the overall economic climate and other external factors. Thank you for joining Explain the Charts. We'll see you on the next video.